Tax refund surge ahead. These people will get the biggest refunds. Every year, millions of Americans look forward to tax season with one big question: how much will my refund be? For many households, the tax refund acts as a financial boost that can help pay bills, reduce debt, or even fund savings goals. In 2025, experts predict a potential tax refund surge, but not everyone will benefit equally. Certain groups of taxpayers are more likely to receive larger refunds than others based on credits, deductions, and filing status. Let's break down who may see the biggest refunds this year and why. 1. Families with children parents often benefit most at tax time thanks to credits designed to support families. The Child Tax Credit, CTC, remains one of the most valuable. Eligible parents can receive up to several $1,000s per child, depending on income and family size. Families with younger children, in particular, may see larger refunds because the credit is partially refundable, meaning it can increase your refund even if you owe little or no tax. 2. Low to moderate income. Workers who fall into low or moderate income brackets may qualify for the Earned Income Tax Credit, EITC. This refundable credit can dramatically increase refunds, especially for taxpayers with children. For example, a single parent earning a modest income could receive several $1,000s back. Even workers without children can still qualify for a smaller but meaningful credit. 3. Students and recent graduates, education-related tax breaks can also result in bigger refunds. The American Opportunity Tax Credit, AOTC, offers up to $2,500 per eligible student, with up to 40% refundable. This means that even if you don't owe taxes, you could still get a portion of the credit back as a refund. Recent graduates paying off student loans may also benefit from deductions on student loan interest, reducing taxable income and potentially increasing their refund. 4. Taxpayers with withheld income employees who have had more tax withheld from their paychecks throughout the year often receive a larger refund. While technically this means they overpaid the IRS during the year, many still see this as a welcome financial cushion when tax season arrives. Adjusting withholding with your employer can change this outcome in future years, but for 2025, many workers may notice larger than expected refunds due to higher withholding. 5. Those who qualify for new or expanded credits tax laws evolve frequently, and certain years bring expanded credits or temporary boosts. Taxpayers who stay updated on changes are more likely to benefit. For example, if Congress increases refundable portions of credits or expands eligibility for energy-related tax credits, those who qualify could enjoy a noticeable bump in their refunds. 6. Married couples. Filing jointly. Couples who file jointly often qualify for larger income thresholds before phase-outs reduce credits or deductions. This means more of their income is eligible for valuable tax breaks. In addition, joint filers may find that their combined deductions, such as mortgage interest, charitable contributions, or child-related expenses, add up to a much larger refund. 7. First-time homebuyers or green energy investors. Taxpayers who purchased a new home may qualify for deductions on mortgage interest and property taxes. Meanwhile, individuals who invested in green energy upgrades, such as solar panels, electric vehicles, or home efficiency improvements, may qualify for special credits. These credits can significantly reduce tax liability and, in some cases, boost refunds. Why refunds vary so much? It's important to remember that a tax refund is not free money. It's simply the difference between what you paid throughout the year and what you actually owed. Factors such as income level, dependence, deductions, and credits all play a role in shaping your refund amount.